This is John Murphy, and it's Thursday evening, October the 25th, and we're going to take a look at the market message that I published this evening. We're talking about relative strength, but by and large, what we're talking about here is certain groups within the market that are attracting money. Most of them are defensive groups, and I want to focus tonight primarily on consumer staples. In fact, if you read the headline, consumer staples continue to show good relative strength. And then we talk about some of the leaders in that particular group. I want to show you a technique here for finding this. I do this right from the performance charts. What I'm showing here is the blue line here is the consumer staples, XLP, SPDR, relative to the S&P 500, except in this particular case, I'm making the S&P 500 the zero line. By doing it that way, I can see what an entire group is doing relative to the market. You can see that during the last 4 or 5 years, consumer staples have been very much out of favor. That's perfectly normal during a bull market. However, if you move down to chart 2 and zoom in a little bit, this shows the exact same chart since the beginning of 2006. Once again, the S&P 500 is the flat line or the zero line, and that enables us to see what the consumer staples group is doing relative to the market. And as you can see, we're well above the zero line. That means that over the last 22 months, actually even since the beginning of this year, consumer staples are actually doing much better than the rest of the market. In fact, they've become one of the strongest groups in the market. So, and you'll also notice, by the way, that the latest uptrend in this performance began right around the middle of July when the market started to roll over. So even though the market has made a comeback since then, money is continuing to flow into these defensive stocks. There may be lots of reasons for that, having to do with the fact that they're large caps, they're multinationals, they also benefit from a weaker dollar, but they are also defensive stocks, and they usually tend to do well in the latter stages of a bull market. Now you can be satisfied with that and just simply put some money into a consumer staples ETF or a consumer staples mutual fund. But if you want to look for some individual stocks within the group, the way I like to do that is using the same technique. If you look at chart 3, we're taking the XLP, or the consumer staples SPDR, we're making that the zero line, and we're looking for stocks that are outperforming. And 3 that show up here are CVS, the red line, Merck, the blue line, and Coca-Cola, the green line. These are basically, they're like ratios, really. They simply show us what these stocks are doing relative to the consumer staples group. For example, Merck, which is the strongest of the group, has outperformed the group by 25%. That's pretty good. So if you're looking for leaders within the group, this is a very nice way to do it. So it brings us back to the concept of relative strength. It enables us first to isolate a sector that's showing new leadership, and then it shows us how to find stocks within that group that are showing leadership as well. I'll leave it up to you to read through some of the other charts in here, although I would just want to mention briefly that there is a theme here. If you look, for example, at utilities versus the transports, you'll notice that utilities are doing quite well, whereas the transports aren't. Utilities are a defensive group, whereas transports are an economically sensitive group. So we're seeing the same thing. Money's coming out of economically sensitive stocks like the transports, and they're moving into defensive stocks like utilities. I also just note tonight that Microsoft hit a six-year high today. That was the strongest stock in the Dow. That's also part of the strong technology group, whereas AIG plunged today, hit a new 52-week low. That's part of the weak financial group. So the basic message is that there are certain groups that are going up, like consumer staples, utilities, technology. Those are the groups you want to be in. And there are certain groups that are not doing well, like transports and financials, that you want to be out of at this particular point. Anyway, take a look at the charts. I hope you find them useful, and we'll be back in touch later in the week. This is John Murphy. Bye-bye.